Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the forex synthetic market. If this is your first time of visiting my YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to like and refer this channel to your network so that YouTube pushes to a higher level of audience. I don't upload video anyhow. I actually look at the trading community, look at all those stuff that mess up traders, all those stuff that leads to losses. I actually go and make research, at global level and in high intuitive manner and philosophical level, and I come back with the real solution to these problems. And right here, the topic we shall be discussing is supremacy of major higher time frame impulse / long-term trends. H.T.F means higher time frame, okay, in forex synthetic market, okay, in forex synthetic market, okay. So the topic is supremacy of major higher time frame impulse long-term trends in forex synthetic market, supremacy of major H.T.F or higher time frame impulse / long-term trends in forex synthetic market. This is the topic we shall be discussing, and what motivated me to create this content was the event of ZAR-USD or gold USD exploding, or a kind of skyrocketing from price of 2,000 to a price close to 3,000. Like gold went from price about 2,000 to price that is almost getting approximated to 3,000. Okay, and there's 900 down index actually went from price less than 15,000 to a price almost beyond 70,000. And what should actually have motivated you to catch this move is, if you have passed through this topic, you need to pass through a topic for you to succeed. The thing is, the universe is modeled and guided by spoken words, and that's why we are creating this content, so that when you listen to the words, you take action. Okay, this is not only just for ZAR-USD and there's downwind there's assets. We can also see this trend, this behavior in some other forex and synthetic asset. You can see it in the Bitcoin USD. Bitcoin went from price below 30,000 to a price above 100,000. Okay, and volatility 75 actually crashed from a price above $1 million to a price far less than 100,000. Okay, and some of the boom and crash markets actually experience this impulsive and long-term trend characteristics, even some jump markets. And we want to treat this issue, we want to treat this problem so that you can take advantage of it in your future. But at this point, at this juncture, if you have been losing money, you know really in your mind, in yourself, that you have been losing money trying to actually trade on your own, deploying some strategies or what you have learned on social media or offline, and these things are not working and you keep losing money, do yourself the best thing, be proactive by leveraging the effort of successful trader. Try to copy and paste our trading rate. Try to actually improve your knowledge by enrolling for our courses and mentorship. That's cool. I will quickly open ZAR-USD and actually launch this topic for real, like put this topic to application. Okay, so we start with basic things. Okay, we start with basic things. Right here, we need to understand the meaning of impulse So I'm assuming that we are working on the highest time frame, which basically will be the monthly time frame. So we are seeing an impulse in the higher time frame, the highest ever time frame, which is monthly, because this is what you can see in the MT5, though it could be yearly, but maybe yearly can be a little bit complicated to understand, so we use monthly. And so when you are on this time frame, you are not going to ask yourself, do we see an impulse? Do we also see a long-term trends? Now, what is an impulse? An impulse is an event that have a maximum energy of concentration in a defined direction, and in most cases this direction aligns with the long-term trend. So what is a long-term trend? A long-term trend is the most obvious or prominent trend in which the major participants in that market are pushing market, in which the smart money, the big boss, the banks, the big institutions are pushing market, as seen in the higher time frame. Okay, that is shortly what these two terminologies are. And right here we'll be in the monthly time frame on 𝑧_USD, that's gold USD, will be on the monthly time frame. And then we want to see the trend in this market. What is the trend in this market using the left-right rule, because market flow from left to the right. Okay, we say the asset actually fly from 2000, so we need to get our current references. So the market fly from 2000 to a big value. Then in how many ways can we believe that this thing is going to be real, is going to work? So this is 2000. This is the price of 2000. That's when 𝑧_USD was at 2000. I may not exactly get the 2000, but I can, yeah, this, take it approximately 2000. Okay, take it approximately 2000. Okay, this is point, it's supposed to be point something. Okay, so right here, this is what we want to see here. Okay, so exactly now, an impulse is a length whose magnitude is the highest in the vicinity, like an action, a price action in which the magnitude of the length is maximum with respect to order within that vicinity in the same time frame of analysis or observation. And right here we have an action that break out of this loop. So in the month we have an action that break out of this loop and then just move to attain a price of 2000, right? So this shows that the long-term trend of this market based on left-right rule is upwards, because it actually break out of this block and then attain a very big price. Now this is called impulse. This is called impulse because the length is bigger than other retracement. Okay, opposite of impulse is retracement. So this impulse shows that gold have potential to even create this type of length more than ×2, and it exactly did it. It actually did it. Okay, and it keep doing it, right? So when you understand the long-term direction of the market from using the left-right rule, I've talked about left-right rule and I'll put the video in the description of this one. And so when you understand the long-term trend in the market using the left-right rule and you understand the impulse, the current impulse state, you can be able to actually continue such characteristics. You can trade it, you can believe in it, and actually hold it until the market saturate at infinity. Meaning that because gold actually spike up, you are going to believe that it will keep spiking up until it attain the maximum price ever, and you will base this mathematically based on previous action, that the futuristic action on 𝑧_USD is going to be at least 2 times or more on the previous actions, and with that, nothing will prevent you from holding this trade long term, okay, and making massive profit. And you can be adding position as time goes on. So that's the power of higher time frame analysis. And so this is the essence of this topic. So we'll be going to this 900 down index, and we see what is happening. Actually, this market is actually trading above 70. It's trading at above 70,000. And so first of all, I said that was a time the price was at less than 17,000, right? And this is 17,000 right here. So we studied the trend characteristics in the long-term manner. So in the long term, we see that this market actually break out of every break of structure matters, and they imply a lot of knowledge bases in the market. So there is a break of structure here, and the market actually have a small impulse. Yeah, but that is impulse. No, an impulse is an impulse no matter the length, so long it break a level. So we have an action that starts from this turning point and break out of this turning point. And so we say this action, because every impulse have origination, it start from here and ended here, right? And break and then have an internal break of structure, right? So it becomes an impulse. So an impulse must have internal break of structure. It must break structure in between and attain certain level before another pullback will start. Okay, though I didn't say this in the beginning, but cash is right here. And so we say this is an impulse event. Why? Because it started from a source at here, then create internal loop and break out of that loop. So it is a completed impulse, because impulse is maximum energy, infinite energy. In other words, they have to break a level, and then when you break this level, we are going to capitalize it on this. As a good trader that want to succeed, you are looking for some little pullback, and then you continue that long-term trend, and that's impulsive characteristics of that market. And what happened, you should have entered this market anywhere you wish. If you can enter here, you can enter here, you can enter after some pullback, but in the same time frame, and you are holding this trade and you are cashing all this move, almost more than 40,000, 45,000 pips. And basically the only thing you need to master is risk management. Like, in how many ways can you enter this trade without being taken out? That's cool, and that's why you need to enroll for our mentorship for you to learn this thing, or you just get our courses to learn strategies of entering trade, okay, and strategies of synthesizing or producing signals, okay. That is cool, man. That is cool. And right here I will be touching another asset, which is volatility 75 index in the monthly time frame. So right here we have this asset. That was it. We allow this to load. Let's allow this to load. That was the time this market was at a more than $1 million price, and so let's let it load. The screen cannot show those data because they are historical, right? And this market is very volatile, but that we can still use what we are seeing on the chart to model, like to apply these ideas. And so we have a market that breaks structure. Like, we need to understand the trend first by looking at the break of structure, okay? So we have a market that breaks structure here, okay? You can see it's reading. So you see, yes, you see that place, this upper part here on the price column, you see that is over 1 point something million, right? Cool. Now you see this market actually show an obvious impulsive action, an action that break level in between. Okay, so what is happening here is that we have an action, that candle, this candle closes below this low. So this is a sign of, you need to catch this now as early as possible so that you will not be faced with order. And this is a kind of what we are looking for. So we have a downtrend I take it as long time because I get the signal in the highest time frame, so it's a long time. And then we have a pullback, so and we have an impulsive action because this thing break out of here impulsively in such a way that the pullback, the magnitude of the pullback is less than the magnitude of the action that created the impulse. Because if you want to measure the magnitude of an impulsive action, you are going to measure it from the source to where it started creating a pullback. Okay, so the source is here, and so you measure it to here. So this is almost over 500,000, right? So when you measure the pullback is just 260,000, right? So the impulsive action is in the direction now is downwards, while the pullback is upwards. So what do you do when the pullback is done? You sell the market, right? So you sell this market at this price, and then you should have hold it long term infinitely, like you hold it infinitely, or as much as you can. That's the theory of the market, and not actually a theory. That's the general law of the market, hidden from traders. Only people like us know these things, because broker will just drive market in one direction, triggering trader to have emotional reversals, and they keep losing money doing that reversals, right? Right here, we need to check another forex market, and that will be, let's check this market. That's good. We need to check GBP USD. I remember this market traded around 1.3 sometimes in the past. Okay, but we could get some idea of this great economy, Britain and United States. The exchange rate has always tried to remain below 2.000 and 3.000 plus. They want to lie between 1 and 3. They don't want to, it shows the economy is very strong. It's very strong. The divergence is not much. The differential is not much by that exchange rate. Okay, look at what happened here. Right here, we have a market that was going up, and it reached some price about 1.3 plus, like 1.34 and beyond, and so that we have an impulsive move. Yes, it is impulsive because after that move there is a pullback. Who cannot go against this impulsive action based on the magnitude of the length? Okay, so we have a pullback, and the pullback start dropping, and so what you need is to sell this market, right? What you need is to sell this market and hold it long term, because I'm expecting this market to actually keep going down, until it decides to change trend. You cannot change it. You might notice change of trend. You in this case, you study the change of trend in the weekly time frame, so that's when you can take your profit. But right here, you can't change trend. Trend have to change naturally. If you are changing trend, you lose more money. If you assume that trend must change, you lose more money. It have to change by itself, and you join the trend, right? Okay, so let's pretty much touch crash market, do and crash market right here. We can learn a lot of stuff. This is crash 300 in the monthly time frame. Okay, so we have a market that experienced a massive shooting star. So we have a shooting star, so that is an impulsive action. Okay, and then we have a pullback whose length is less than, okay, let's measure it. Let's measure the source of the impulsive action. This is it was started from there, ended here. This is around 10,000 pip, and we have a pullback. Okay, we have a pullback of 4,800 plus. So where is the direction of the impulse? The direction of the impulse is downwards. The direction is what we need here. Okay, so what we need some good entry. I don't know how we get that good entry, but we know how we can get it. But you cannot know it until you enroll for our courses and mentorship, right? And so here we enter this market and we hold it until he decide to change trend. You will think that it have changed trend here. No, if you understand how trend changes, you will know that it have not changed trend. It just came and grab liquidity on a fair value gap, or it want to come and grab liquidity here and continue going down. But normally you can also have some internal change of trend and use it to control your profit. So you can take some profit off as it is breaking this level. This is internal, and that's cool, man. Thank you. Keep coming, keep subscribing. Make sure you are positive, invest in yourself, and invest in our account management packages and make more money, and trade our signals in real time, copy and paste our trade. Okay, bye for now.